morning. Good morning, everybody. Hope all is well. Hope everyone is doing vanglorious today. Hope you are doing vanglorious today. Good morning. Good morning. Good morning. I'm pretty sure everybody that's on here know who I am, but just in case somebody don't know who I am, my name is Timothy Lee Rogers Sr., baby. My name is Timothy Lee Rogers Sr. I like to get on Al Gore's internet and share my thoughts when it comes to price action. Um, I'm not gonna hold you long today. It's almost time for the market to open, and I just wanted to ask you a question. The question I want to ask you is: did you catch the lesson price action taught Monday, which was yesterday? Did you catch the lesson that price taught you Monday? Sound off in the chat. Did you catch the lesson that price taught you Monday? Tim, how can we catch the lesson if we don't know what you're talking about? So just let me know in the chat. While I go over here and see who in the chat, y'all let me know in the chat. Did you catch the lesson that price taught yesterday? Did you? Did you? Did you? Buenos dias, Valdez. Buenos dias. Good morning, Trey. Here to learn and share. Good morning to you. The birds, the cicadas making noise. The birds ain't chirping no more. Them cicadas, golly. It's cicada season in Columbus, Georgia, man. What's up, Miss MJ? Iraq, what's going on? Rhonda, what's up, finest Superman? Deborah, paging Nurse Deborah. Paging Nurse Deborah. What's up, Deborah? What's up, Seawalk? She says, stay out. That's one lesson. Miss MJ is honest. She said, I did. So for everybody besides Miss MJ, y'all get out. I'm only talking to Miss MJ because y'all ain't say E-Rock, you can stay. Yeah, E-Rock, you can stay, E-Rock, because you said stay out. You do. Everybody else, get out the room. I'm only talking to E-Rock and Miss MJ. Now, the reason why I said E-Rock, that was a good one, right? Is because yesterday, the lesson that Price taught us yesterday, right, is that one, time and price is the key to success in trading. And two, and this is the most important lesson that Price taught us yesterday. I'm gonna try to get close as I can because I want y'all to oh, my mic can't go that far. Like, let me do this right here. Hold on. I want to get close as I can. Let me see here, close as I can. That's good enough right there. Do not chase price. Stick with your bias until your thesis is broken. That's why you always have a point at which your thesis is broken. If your thesis is not broken, stick with your bias. If your setup is not present, if what you want is not present, tell them, E-Rock, tell them for me, E-Rock, stay out. If your setup is not there, if your thesis is not broken and your setup is not there, stay out. Now, let's talk about it. Right? I ain't say get off alive. I just had a private conversation with Erica and E-Rock. I mean, with E-Rock and Miss MJ. Okay, let's talk about it. Serious and all due seriousness, right? Since Michelle just got here, right? And all due seriousness, right? I don't know if you all were present for the Sundays price action thing we were doing where we was taught. We went through like the bias for the monthly, the weekly, the daily. You know what I'm saying? We went through what our biases was, and we went through what broke that. What broke that for us, right? Go back here. Right? We went through what broke that for us, right? So we were saying on this is Friday's calendar right here, right? So long story short, the monthly was still bullish, the weekly was bearish, and the daily was bearish. That was the bias that we determined. I speak in terms of we because we a family. I'm the only one with the mic, so it's we, right? Anything we discuss gonna be we. Good, bad, or indifferent, right, wrong, it's gonna be we, right? So what negates your thesis? What if your point of last line of defense is the market is open, the market is open, the market is open. If you want to go trade, trade safe. If you want to stay here and listen to me, oh, you're welcome to listen to me. But if you're gonna trade, please trade safe. If you're not gonna trade, please take a copious amounts of notes so you can go and study what you saw today. Thank you for tuning in. And if you want to get funded, use my link to try Apex. That's who I use. I appreciate everybody that's been using the link. Hey, whoever signed up for them Apex accounts yesterday, one of those accounts was Tradeovate. I hope you meant to do that. Whoever you were, you signed up for like 6 accounts, right? 5 of them was Rhythmic, and 1 of them was Tradeovate. Like the Tradeovate was a bigger account. If you looking on here and you know who you are, if you meant to do that, okay. But it's too late now because you already bought it. But you know, you signed up for multiple accounts, and one of those 6 was Tradeovate. That's cool if that's what you meant to do, but just wanted to put that out there. Thanks for everybody who been using my link. I do get a small commission every time you use it. Right now, they're doing 90% off. So, hey, if you are a consistent trader and you want to try your hand at getting funded through Apex, please use my link. It's in the description. They don't pay me to say that. I'm just asking because I get a small commission. And right now, they're offering 90% off. Hey, take your shot. Now, this is Friday's candle, right? We said we were anticipating this low to be the draw, right? So since we were bearish and this was the draw, we were looking for opportunities to sell, right? I know you're looking at this candle right here and you're saying, Tim, it went up all day long. Again, if your thesis has not been broken and your setup is not there, just stay out. Now, you can trade against the grain. I'm not saying is anything wrong with trading against the grain, right? But Friday's candle right here, if we're looking for the low to be the draw, we anticipate some type of retracement to attack the low or to draw toward the low. You want to buy in a discount, sell in a premium, right? The last line of defense for this Friday's candle right here would be what? The consequent encroachment of this humongous wick. Why is that the last line of defense, right? Because if you look at where we closed, let me get my fancy dancing. I'm sorry. If you look at where we closed on Friday, right? Put my crosshairs on there. You see, we closed all the way down here near the low. If you're closing near the low, what does that mean? That means you're in a discount, right? A very deep discount. What do we do in discounts? We buy in discounts, right? What was our bias? Bearish. If we're bearish, what do we want to do? We want to look for opportunities to sell. Again, you can trade against the grain. There's money to be made trading against the grain. But we're talking about our bias was bearish, right? And so we're looking for the sell side to be the draw. If you're in a discount, you're not trying to sell while you're in a discount. That's why y'all hear me say a lot of times, if it goes and get these lows right now, it's going to go without me, because I don't want to sell in the discount. I want to sell in a premium, right? Now let's go down to the 1 hour charts. Last line of defense on the daily is that consequent encroachment of that wick that we just talked about, right? Where is that consequent encroachment of that wick? Right here at 45. Which one is it? All right. 45, 42, 25. Right? That's the consequent encroachment of that wick. 45, 42, 25. That's the last line of defense on the daily candle from Friday, right? Looking at the hourly candles, what do we have, right? We got this breaker that we have marked out yesterday. I've since taken that off, right? I've since taken that off because we came up to it, respected it during the London, right? But once we started going into the New York, it was, we slowly melted up all day, right? We got this humongous SIBI, right? That humongous SIBI right there is just below this SIBI right here. So this 2 p.m. Friday candle that created that SIBI, and this 1 p.m. Friday candle that created this SIBI, right? We went all the way back up, redelivered the 2 p.m. SIBI, right? Got up to the fair value gap. And where's that fair value gap? Let me hide all this other stuff so we can see exactly what we talked about. I'll leave that down there. No harm, no foul. Right? So from Friday's high, come here. From Friday's high to Friday's low, right? Where does this SIBI reside? Can someone tell me where that SIBI resides from Friday's high to Friday's low, right? Somebody tell me in the chat where that SIBI resides, right? So now the consequent encroachment of that daily wick was up here. We said it was at let's see if we can find that easily. Nope. That's a weekly. That's another important line there. That's a weekly wick. I'm gonna leave that there. Notice where that is. Horizontal rays. That's what I need. Where is that? Where's that freaking ray? Oh my God. Yeah, hold on for a second. Oh, that was it the whole time. God dog it. I thought that said weekly, but that was the ray I'm looking for the whole time. Daily. I thought that said weekly, but it was daily. I'm tripping. All right. Yes, in the premium. Hold on. Who said that was in a discount? Seawalk, stop that. It's in the premium, right? From Friday's high to Friday's low. This SIBI is in the premium, right? That's the imbalance that's in the premium. This imbalance spans in between the premium and the discount. This imbalance is in the premium. Where is that imbalance also? right in line with the last line of defense on the daily, right? So it's very important to understand what you're trying to do and where price is going. So if you are the lesson, I done said a million lessons, but it's lessons upon lessons upon lessons. If you are not willing to trade against the grain, right? Time and price is king, right? If you are a London trader, right? The London time zone gave you an opportunity to trade with your bias of this being the draw on liquidity. Does it have to get to the draw? No, but you wait for price to give you an opportunity to trade with your bias, to trade with your draw. You don't just try to force your will upon the market because you say, it's going to come down here. We wanted to come here, so I'm just going to get in and wait till it goes there. And then when I get busted in the head, I'm just going to blame the market or blame someone else. No. London gave you opportunity to trade with the bias. How did it do that? It came up into this breaker, some other lower time frame stuff, and then it came back down, giving you an opportunity to trade with the bias. Came up, hit a breaker, came down. Right? Now, coming into the New York, what did it do? It went up, hit an imbalance, didn't touch it, but it got up to the consequent encroachment of that wick. If you don't want to see it violate this, meaning close above it, right? Went up there into a premium and then did what? Sold back off toward the draw. Now, here's the thing. It got there at 4 o'clock yesterday, which means if you were trying to only sell, meaning you were bearish and you were looking for reasons to sell, you did not get presented a good opportunity to take a short yesterday. You could have scalped something, but in the bigger picture of selling to attack this draw on liquidity during the New York, you did not get presented an opportunity to do so. You should have been sitting on your hands all day if you were trying to short with this being the draw on liquidity, right? When was your opportunity presented? When the market was closed right here. It hit this area right here, right? If you wanted some type of confirmation, you was like, hey, Tim, it's been running all day. I'm not just going to trust getting in right here, right now. You're not wrong, because it just melted up and we had a lot of divergence and it was like high resistance liquidity runs. It was just crazy, right? So where did the confirmation come in? Over here at 9 o'clock at night. That's the confirmation right there, right? That's the confirmation right there. We was over here. We were just dilly-dallying, consolidating right there. And then that was the confirmation move right there. Right? 9 o'clock at night. So you didn't have an opportunity during New York yesterday to take this short bias. It wasn't there. There's no harm in saying, hey, today is not my trade day. If you're not willing to trade against the grain, ain't nothing wrong with not trading against the grain. The trend is your friend. You don't have to worry about being as nimble. The moves, yes, this is against the grain move that moved beautifully yesterday, right? But in the grand scheme of things, do you really think the ES takes all day long to move? We're going to go from peak to trough, from the lowest of the low at 6 a.m. yesterday, right? Matter of fact, we're gonna go from the actual lowest of the low of the entire day, right? 41 and a quarter points. Do you think the ES takes, and let's see how long it took to get back to that point. It got back there on this candle here. This candle here. So 37 hours. It took 37 trading bars, 37 hours to move up 41.25 points and then come back down. Them 41 in this. Do you think the ES really takes that long to move? No, it doesn't. It don't take that long to move 41 points. It can move 41 points all in a session if it really wanted to. If it really wanted to. So you would, and matter of fact, if you were trading with the bias of drawing toward these lows right here, right, during the New York session, this right here, what's going on right now, that would have been your entry right there at that fair value gap right there. That fair value gap and that breaker right there. You got a breaker here. You got a fair value gap there. That was your first opportunity to enter short during the New York session right here while we on live together, right? When we pushed up into this fair value gap in line right over here with this breaker over here, right? All right, came down, this low, came up, broke that high. We traded through it. Boom. There's your breaker right there. There's your imbalance, right? If I highlight right there, we went to boot right there, went pretty much 50% of the body of the candle, right? Went up just above the high of the imbalance. Then we pushed down, right? First touch, 45.09. Boom, that 10-point trade right there. But that was your first opportunity to trade with this bias. Now, when was this bias spoken of? Sunday. So it was spoken of Sunday. So if you don't trade the London Tuesday morning at 9:40 was your first opportunity to try to trade with the bearish bias during the New York session. Jesus Christ, stop calling me spam risk. Spam risk done messed up the IG. I'm about to hang it up, IG. Ain't nobody on there anyway. Discard that. So, to summarize, know what your intentions are. Know what your plan is. Develop your plan, devise your plan, whatever you want to say. Understand what you're going to do before you make a move. What does that entail? Let's type. I like typing these days. 1, know the draw, right? 2, know your bias. 3, know your session. Meaning, what session you gonna trade? That's what I mean when I say know your session, right? Wait for your setup. 5, execute. Right? All right. Where's execute at? Execute is last. Right? Execute is last. And I think that was it right there. Yep. That's it. Just hit it. Just hit it. Just hit it. Execute was last, right? So it will not happen when you, it won't happen when you want it to happen. It's going to happen when the algo wants it to happen, right? And how do you get in sync with the algo? By understanding the price delivery, the order flow, and being patient, right? Let's type again, right? Understand, I spelled that wrong. Order flow, understand order flow and price delivery. Be patient. Did I spell that right? If I didn't, I don't care. Right? Understand order flow and be patient. So again, the lesson yesterday was a new lesson. It's a lesson upon lesson upon lesson. Sue me. Don't beat yourself up if price doesn't do what you wanted to do when you wanted to do it. Right? Stay patient. Well, first trust your due diligence, whatever. To trust your it ain't research. Trust your analysis. Don't beat yourself up when price don't do what you think it should do when you think it should do it. Trust your analysis, right? And the reason why I say don't beat yourself up when it don't do what you think it should do, because if it ain't doing what you think it should be doing, it's probably some manual manipulation going on. So don't beat yourself up when it don't do what you think it should be doing when you think it should be doing it, right? Trust your analysis. Trust what you've learned. Trust what you've studied, right? Trust your analysis, and the price will let you know if you're off size, right? So that's the importance of having your, this is, if this happens, my thesis is broken. How do you come to be able to get to the point where you say, if this happens, my thesis is broken? By understanding the order flow and price delivery. If you understand the order flow and price delivery, you know how to mark your chart and say, if we get past this point on a closing basis, I'm on the wrong side. Do y'all remember yesterday when I was like, the daily is still bearish? No, I was like, the hourly is still bearish. The 15-minute, it's, the jury is out, so you got to stick with the initial bias of bearish, and the 5-minute has turned bullish, right? So on the 5-minute level, it had turned bullish, but on the hourly and the 15-minute, it was still bearish, right? The 5-minute bearishness had been broken, but the 15-minute and the hourly bearishness had not been broken, right? So you're able to understand, hey, if I want to trade against the grain, I may be able to do so on the 5-minute, but I have to respect the 15-minute and the hourly PD arrays because they're still bearish. It can just be coming back up to this point, and then once it gets up to the last line in defense for the day, and it closes above or below your last line of defense, then you be like, okay, now the daily has shifted to a different bias. I'm on the wrong side for the entire day, right? That's how you learn how to sit back and be patient and say, hey, I'm not going to rush this because the price still haven't told me I'm wrong, right? It's just not my turn to trade. It's not my turn to trade. Ain't nothing wrong with sitting on the sideline. And like I say, when this thesis was drawn up, it was on Sunday evening. For a London trader, you had an opportunity to trade on Monday. For a New York trader, your first opportunity to trade with this bias to attack this sell side came today, Tuesday morning at 9:40. This 9 o'clock hourly candle. So Tuesday morning at 9. Let's go to 15 minutes. Right here. This 9:15 candle right here pushed up into that area there, and at 9:30 open, tapped up a little bit, got above that, and dumped. Right now, this close out right here, that's an interesting area to try to take a short right there. If this candle closes in the next 4 minutes and leave this fair value gap right there, right? This fair value gap right there would be an interesting area to take a short. Right? Why do I say that? Because it's right here in line with the new week opening gap. And if this candle closes down here, it'll be closing below this new week opening gap. So that area there would be a nice area to look for a short. But Tim, what about I ain't worried about all that up there. Why? Because we've melted down below this right here. So, and we've left this area. So I'm looking at all of this right here as a balanced price range until price does something that it wants to do. Right? Until price does so, and we got another new week opening gap just below that. Right? Maybe a silver bullet type opportunity. But Tim, what if it comes up and it stopped me out? Well, you stopped out. That's part of trading. Anyway, I think that's all I got, man. It's almost 10 o'clock. I think that's all I got. Know the draw, know your bias, know what session you're supposed to be trading. Wait for your setup. Your setup, get that, execute. Your setup not there, don't execute. Execute is the very last thing, and it comes after waiting for your setup. How do you learn how to be patient? Right? Understanding order flow and price delivery. Going into your chart, marking specific levels of, hey, if we hit this level, I'm wrong. Until we don't hit this level, if we never hit this level, I'm not wrong. I'm just waiting on my setup. When my setup shows up, I execute. What if it don't show up during my session? I don't trade. What if it don't show up for my session for 3 days? I don't trade for 3 days. Simple as that. Just because you're a day trader don't mean you're going to trade every day. You might trade every day for some weeks. Some weeks you might trade once a week. Some weeks you might trade twice a week. It depends on what model you trade. How often does your model appear? You should know that from your back testing. That's all I got. Anybody got anything for me before I get off of here? Hopefully this was helpful to somebody. If you found value in it, share it with somebody who you think might find value in it too. And again, if you're already a consistent trader, you know what I'm saying, you're a consistent trader and you want to take your shot at trying to get a funded account, try to get funded. I use Apex. I ain't got no beef with no funded place, but Apex is the one that fit me. I got an affiliate link in the description if you want to try them out. Only if you're already consistent. I appreciate you using my link. I appreciate everybody that's been using my link. Do anybody got anything for me? I hope everyone has a prosper. Me too. Thank you, E-Rock. Say it loud for the people in the back. All right. All hearts and minds are clear. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amounts of notes so you can go back and study what you saw today in price action. Learning how to read price action and understanding price delivery and order flow That's the golden key to unlock everything that all those different little fancy words that ICT be using, all them different little PD arrays, them blocks and proportions and orders and all that right there. If you don't understand how price flow goes, all them fancy words won't help you at all. Sit down and just watch the candles print. If you can't do it during the day, record the screen and then watch it when you get off from work. Y'all be safe. Happy trading. I see y'all on the next one. Big Spider gone.